Welcome to this video on stochastics. This is going to be part 2 on how to use stochastics, and I'm going to be combining stochastics with another oscillator as a short-term oscillator that's going to give us short-term weakness within a trend. So let's just to review what we talked about last time. We talked about that when this stochastic oscillator comes below some predefined value, such as 20%, and hooks up, it becomes a buy. And it stays a buy until it crosses back down below that predefined 80% line. But the question is, let's say that we come in this is a long time that this trend runs, from September all the way through November. And let's say that we come in the middle here and we're trying to figure out what's the best time to get into the trend. And so this is what I was talking to you before about. The whole concept of trading is juxtaposing short-term weakness against long-term strength. So here's our trend right here, right? And we know that that's an uptrend. And I'm going to go ahead and insert my buy arrows here because we know it hooked up across the 20 here, right? So there's your buy. And it stayed above that, crossed above the 80 here, stayed above the 80 until it got to here. So this would have been our sell signal right here. Okay, so well, what is that? How do we take advantage of this trend? Let's say we want to be we're looking for multiple entry points here. Well, what I like to do is to take a short-term oscillator, and much shorter than the stochastic, and put it against it, or juxtapose it against this strength here. And the one that I like to use is called money flow indicator. And the reason that I like it is simply because it's a combination of price and volume. So this is kind of how it's derived. This is from my the manual here, and how the formula is derived from. But basically, it's dealing with something called the money ratio, which comes from the money flow, which is the volume times the average price. And the money ratio is going to be the positive money flow divided by the negative money flow. And the money flow index is going to be 100 minus 100 over 1 plus this money ratio into here. Long story short, this indicator, you're able to find it. It's pretty common. This is Metastock that I'm using, and I like this oscillator just because it's a little bit more sensitive, because it uses volume instead of just relative strength index is a close cousin of the stochastic oscillator here, and I kind of want to stay away from that. I want to get something that's a little bit different, because I like to put, when I'm comparing two indicators with each other, I don't like to necessarily take one that's from the same family of indicators. And even though RSI is not a stochastic, it's pretty close. It's related. Let's just say it's a cousin indicator of the stochastic. So I want to take something that's a little bit different and put it against the stochastic, because it's going to give us more information. So that's just one of the rules that I try not to do. When I'm putting a bunch of indicators on the screen, I never want to be basically taking the same indicator and just putting it over and over and over on top of the screen, because you're really just looking at the same thing. So when we take different indicators, I want that second indicator to be something completely different than the first one, or not completely different, but it's different enough to where it's giving us new information, and we're not just putting different variations of the same indicator over and over and over again on the chart. Does that make sense? In other words, I want new information against this information. Okay, so what I'm going to do is I'm going to insert an indicator here, and I'm going to insert this money flow index into a new window into here, and you can choose the time periods. Okay. You can choose 3, 4, 5. What I like to do on this money flow is I like to come pretty low on it. I like to come down to about 2 when I'm trying to find a short-term weakness in a trend. Okay, and what you'll see here is this indicator will create these almost, I call it a semi-binary indicator, because it's almost going between 0 and 1 all the time. I mean, it does pause sometimes in the middle here, but it's going between 0 and 100 most of the time. If I went down, even lower, it would jump around even more. Let me give it a little more color here so you can see it. Okay, so this indicator is jumping up and down between 0 and 100, and the reason I chose a small one here, small periods, because it's able to get there. You could even choose one, and you could see there very clearly that this is completely binary. It's either 0 or 100, and one is fine too. It's either one will work for this. But what we're looking for here is if we have this trend here, and we know that we're trending up. Let's say that we're looking for entry points into here. Well, what I'm going to do is I'm going to put this money flow index against it. I'm going to look for where that hits 0, right? So where's it hit 0? It hit 0 there. So I'm looking for a short-term pullback, okay? And you might not see it in the trend, right? You might not really see it. But this money flow index gives you a nice place to look at. So if I went here and I went here, we go, each time I see 0 here. What is this doing? What is the point of me doing all of this? This just gives you entry points into the trend that you might not have had before. You know, where do I get into the trend? Well, this gives you different points to get in. If you're looking, in other words, you don't want to get in on a point where it's overbought. This is going to give you a chance to get in. Now, you could have taken this money flow and made it a little bit less. You could have made it a 2, okay? And it's going to give you a little. It's going to give you the criteria is going to get a little tougher to get in here, right? So, but it did, of all of these lines here. Let me just delete some of these. Of all of these lines, when you went to a 2, it gave you a much tougher criteria. So it gave you a better entry point. So I'm going to leave it at 2 here. Let's move this over to here. So right there, it gave you this as an entry, and it gave you this as an entry on this trend here, right? So 2 points where you could have gotten in on this trend, and the money flow index tells you that right there. And this of course was our sell into here. So this money flow index will give you a wonderful opportunity to get into trends where you normally may not even see a place to get in. Let's look right here where we had a buy signal back into here where it crossed up. And let's say I'm looking for some pullbacks on the money flow 2. I got one there, 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 and there. So it just gives you, like I said, it just gives you logical entry points. Now, once this trend gets a little more crazy into here, I mean, this is not really a crazy trend in terms of volatility, right? This is a low volatility move. You're just looking for moves. You could also just buy into the bottom of the channel. I mean, that's another way to do it too. If you've got a really nice channel like this, you know, you may just say, well, I like this. Every time it gets to the bottom of the channel, I'm going to buy it, and you know, and so on. But this you know, just is an alternative way to do it. But let's say we get out into here, and it's getting a little more wavy out in here, right? We're getting a little more, you know, crazy action out in here. It's getting a little more volatile out here. Well, now if this is a downtrend, right? Let's make this red for a downtrend. Let's make this red, right? Let's say that's my downtrend now because my stochastic crossed down, right, all the way over until here, right? We know that I'm in a downtrend across below the 80, and it's going to keep going down, right? Well, let's see what we got here. I'm going to look for some entry points, a short point. So right here gave us one right there, which wasn't the best one. The next one was the next best one. But right here, look at this one right here. Gave us a good one right here. So that's a nice short right there. Another one, so this one wasn't as good, but okay. Gave us a shorting point into there, and so on. It gets even more dramatic, right? If we come out into here and we see that, let's say we had a sell right here. Okay, we're looking for another place to start shorting into here. This is a short opportunity right here. And if I go back to the 1, let's say that I'm not happy with this. I want some more entry points. It'll give you a few more opportunities here to take a look at. So what else? Let's see. Going up here. Zoom over here, find some better examples here. That's kind of a choppy environment. It's a little bit tough to trade that. But I mean, even if you saw that we got, you know, we were in a buy basically in here the whole time in a buy, and you were in this, let's go to a 2 just to be on the safe side here if it's getting a little wavy into here. And I would go to a 2 or a 3. If it's getting kind of wavy into there, you kind of want to have this a little bit steeper in here. But let's just say that you know that this is a buy more or less into here. Let's say this is your buy into here. It'll give you some buy points like right here, right here, buy point, right here, buy point. I mean, not too bad. I mean, you're getting pretty close to the bottom there. Right here, that's a buy point. This one probably took you down a little bit. This is still right there, so you would have had to eat it a little bit there. But right here, we're in a buy still. So there's a buy right there on a pullback. Yeah, you're still in a buy here. So there's a buy right there on a pullback, and so on. So, and then right into here, I think this one's kind of interesting, right? When you get into a sell into here, right? This becomes a sell. Let me just make that a little bit bolder so you can see that. This becomes a sell right there, right? And where was our buy? Our buy was back here. Buy was back there. Okay. All right. So there's our sell right into there. So these were, in other words, this was our uptrend, even though it was kind of wavy. We were able to get some pretty good prices. There was one time here we didn't get a very good price, and it went down a little bit. But most of these were pretty good entry points along here. I would say that's a good entry point. That's a good entry point. Okay, right here, this is our sell point. This is our downtrend. So let's take a look here. Right there, I think that's a pretty nice short right there, right? So look at that. So there's your sell point, and you got in on a short right there. Rode that all the way down, and you're in a sell until it comes back up. Now this was when it gapped up here on that whole Fed thing, right? And so we have been in a buy ever since. And if you look at some of these pullbacks here, you would have got in on a pullback here. The next day would have been up. You probably would have just been stopped out on that. And then this next day here, oops, this was here, bought here, pretty close to the bottom. And then another one was here on an uptrend, right there. So interesting stuff here, right? Interesting stuff. You're able to see how this is applied in real time by putting some of these two tools together here. So let me just keep going back here. I mean, this is, you know, it's a simplistic trading system, but I mean, it's not bad. I mean, if you really take a look at this, let's go back to 2008. It's 2008 here. Yeah. All right, so this is our big crash, right? 2008. Let's take a look at this. So here's our sell signal right there. It crosses, stochastic crosses below. Sell. Okay, so now we're looking for these pullbacks, right? So we got one there to short. Got one there. These are shorting. We're looking to short now, right? Because we're in a downtrend. Just short right there. That's a good one. Look at that one. Short. Not much going on here during the crash, right? You're not going to get much of a pullback, unfortunately, right? I mean, if I wanted to go change my sensitivity to a 1, I might get something into there. If I go back to a 1, yeah, I get it. If I go to a 1, I'll get it in there. And remember, as this thing starts running away on a trend, you're going to have to go to like a 1 to get in. So if you could have shorted there on a 1. I mean, the 1 will give you more opportunities too. Like if you go all the way back here on the money flow, there's another short there. And it'll just give you a little bit earlier is all. So if you're in a downtrend, there's a 1. So if it's running away from you, you go to this 1 right into here. So we stayed into this downtrend the whole time. Here's another one right here, another short. It gives you a 1 right there. You shorted that. You're still in a downtrend, right? Because you're down all the way until your uptrend starts. Where does that start? Right about there. Starts. So not a bad place to start. I mean, if you're looking for like I said, a backbone entry It's pretty remarkable that it's as reliable as it is. I mean, I'm just kind of scrolling through here through the charts, throwing these up. Here's a buy. Here's the beginning of a trend right here. So we would look for pullbacks to enter. So right there is a buy. Look at that. Right there is a buy. Right there. Look at that one. Oh, that one didn't do so good. Kind of got a gap down there. Okay. So this is where if it's not running away from you, like on that 2008 crash, probably better served to go with a 2, something like that. Anyway, but that's just the risk that you run as you change the resolution of this money flow index. If you go to that 1, you do run the risk that you could get the next bar could still be down. But you still get, most of these are still pretty good fills, I would say so myself. I mean, look at this one right here. That's pretty good. So, and if you're using the resolution of 1, you're gonna have a lot of opportunities here to get long. So this is just in case you feel like, well, that would have been a sell into there, but that's back to a buy. This is really just if you feel like if you miss the boat, if there's a trend taking off on you, how can I, where can I get in? This is where you get in. This is how you do it. So let's look at this one right here. Here's a good downtrend into here. Okie dokie. Let's make there's your sell. And let's look for one into here. So right there, there's your short right there. Boom. You would have got a nice little sell off the next day. Going back into here, I'm looking for another one, another short. There's a short right there. You might have to wait a couple days. Oh no, it showed you the short there. Okay. You have to wait a couple days, but there it is. There's another one right there. And again, what are we doing here? Why is this working well? Because we've identified the long-term trend, and which in this case would be down, and this is the short-term move or the short-term weakness, and that's basically what trading is. You're looking for trends. Now, some people will look for dramatic reversals and swings, and that's fine too. It works. Depends on your trading environment. I mean, if you're in a sideways environment, you might want to be, trying to pull these dramatic tops and bottoms. But really, it's really all the same thing. I mean, if you're trending, we're finding a bottom of something that's on its way up. So let's see where this is where this trend begins up, right here, right there. There's your uptrend. We'll keep looking through here. So there would be a buy. We didn't get too much of an opportunity into there, right? But there's your first pullback. Right there, and then there's a whole bunch into here that you see all throughout here. This one was, again, if you got a little early into this one, and and so on. So that is just some more examples of how to combine a stochastic with some strength. Look at this one here. Let's take a look here. This is 2007 into here. And again, I think this works even when it starts getting kind of volatile in here, right? So let's just take an example here where you have both a trend and volatility here. So here's our trend starting here. Here's our uptrend. So let's identify that. And our downtrend, we got a little move there, and then this one kind of came into here, so I guess we'll call the end of that downtrend there, right there. All right, and then let's call this down into here again. This is our downtrend into here, just to keep things clear here. All right, so into here, we're looking for these pullbacks, right? So trend went up here, waiting for a pullback. There's a buy right there. Pretty good, right? Trend went up, waiting for a pullback. There's a buy. Trend went up, waiting for a pullback. Got burned a little bit on this one. You had to wait it out, but it's still up, right? Pullback right there. Buy. Pretty good. Pullback. Buy. pullback, buy, and so on. So I mean, the possibilities here are, they go on and on and on. And like I said, if you really want to get kind of picky with this, you know, if you're getting like in a tight trend, you might want to go with the money flow 2, which will give you much more selective entry points, but you're also going to miss a few more. So my recommendation is, if you have a tighter type of environment into here, you might want to go with, you could go with a 2. It's just the 1 is going to help you when things are kind of running away from you and getting more volatile. So like in this situation here, we know we had a sell. So I think in this case, the 1, you've got the 1 going on here. You got a sell here. You've also got one here that didn't work out so well, but still, it was still pretty much getting up near that top. This one right here, you kind of went sideways. We're going up. So even if you kept shorting and shorting into here, eventually it would have come back, because you are in a downtrend still, right? Technically. One right there, short. Okay. Let me go into our sell right here. Here's our sell. Right. So where's our pullback? Got one right there. Got a lot of choppy action going on there. Got one right there. Next day goes down. Oh, this one didn't work out so well. What about this one right here? Pullback, short, not too bad. Oh, you did actually, this came into a buy in here. Okay, so this, sorry, I didn't see that. When this crossed back up into here, right into there, that would have been your buy. So you wouldn't have been shorting into there anyway. You wouldn't have been shorting this, because that came back into a buy, that came back into a sell. So this kind of signals were kind of flopping around there. Let's go back into here. This is the next buy into here. There's your next buy. So now we're looking for pullbacks. All right, well, this one was a little early. So short into there. I mean, sorry, buy into there. Buy into there. Buy. If I go back to the money flow 2, if I feel like my volatility is decreasing a little bit, it gives me a few more selective entries. So you see right there, I mean, in general, I would say as a general rule, money flow 2 is probably going to give you the best. And if you really want to be careful about your entries, the money flow 2 is going to give you the nice ones here. You see this right here, this pullback right here. See this one right here, this buy right there. That's a pretty good pullback. So the 2, if you really want to be careful about your entries, you see how the 2 is giving you safer, much safer points. The 1, you know, it's going to give you, it's going to be sensitive, so it could give you a couple bars early, so you could get burnt. But if something's running away from you, you know, you might want to go to the 1. You know, that's just, you know, like the general rule here. So, you know, here's a 2. So you bought here, it went down a little bit, but then it went back up. Now notice right here, we're moving across. We cross down there. There's our sell signal. Sell. And, you know, that right there, that would have been caught on a 1 if you did it on a 1. Because it's kind of running away here. You see that right there? No, it didn't catch on the 1. Okie dokie, it didn't catch on the 1. I thought it would have. Okay, so let's stay with our 2 here. So here's our 2. We're going to be picky about our point here. We want a 2. We know we're in a downtrend now because the stochastic crossed down, right? It's in this downtrend all the way into over here, right? So, okay, I'm going to short right there. Not too bad. Make some money into here. Come over here. Look at this one. Short right there. Boom. Come over here. Now we see that we would have shorted here. Okay, because it's technically still in a downtrend, but it changed to an uptrend right there, right? So right there, it's an uptrend. Okay, so yeah, so now we're looking for a pullback, right, to buy. So there it is, boom, right there, buy. Okay, not too bad. And right here, interesting. Is that a sell or a buy? Did that hit the 80% line? I don't know. Yeah, that's pretty close right there, right? I don't know. That's, to me, that's kind of looking like a sell, like it hit that 80. That's where this becomes a little bit tricky. If it doesn't quite make it to that 80, I mean, depending on how you did your slowing factor, in the stochastic, there's a slowing factor. You can slow it. I had this at a 5. If I would have had that at a 4, it would have made it, right? It would have made it. So, what are you going to do about that? Yeah, I'm gonna count that as a sell. I mean, you got to be. This is where it just becomes a little tricky in terms of just looking at it. I think if it scrapes it that close, I'm gonna count it. You know, I'm gonna count it here. I mean, obviously, I'm looking at this downtrend here, but I'm just saying, just from in terms of really coming and scraping that 80. Yeah, I think that's you got to consider those things. You got to consider those things. Even like over into here, if you see over into here how it kind of scrapes this 20 and it goes into that buy. So things to consider. Now, let's just say that this is a sell to here, and we're looking to short now. So we're looking to short there. Okay. Now notice we got a runaway trend into here, right? So if you feel like this thing is running away, we'll go back to a 1. You know, if you see this thing really gaining a lot of acceleration to the downside, you might say, oh, well, I want to make sure that I catch something here. And so you could have shorted there, caught that, and so on. And then our next uptrend starts there. So you're just kind of selectively choosing your trades here. Let's see what we got right there. Let's put this back into a buy. And yeah, so I'm still on this. Okay, so I'm still on this 1, which is for our runaway trend. Let's go back to our 2, which is for being more picky about our trades. Remember, we would only go to that 1 if we feel like it's running away from us. Otherwise, the 2, you're gonna get a lot safer entry points here to go long. And these kept giving the buy signal all to here. Right there's your buy. There's a buy. Hooked up here. Made it into a sell. Right there. Barely made it, right? There's our sell. Okay. So now we're looking for shorting opportunities. There's one right. No, there's one right there. Shorted. There's one right there, shorted. No, sorry. We're back into a buy here. Sorry. And then, by the way, you notice these still work. These RSIs still work into here. Notice you could have shorted there. It still would have gone down. It's not that it doesn't work on the RSI. It's just that, you know, like technically anytime it goes at a 0 or 100%, you know, 100 you can short, 0 you can buy. But we want to be putting this against the trend. In this case, the trend right here just hooked back up to up. So we're looking for buying opportunities. So yeah, so that we're looking to buy there. It did drop one day, went back up. Looking to buy there. Looking to buy there. It sunk a couple days, but then went up. I'm looking to. Oof. Guess I could have been looking to buy there, but it would have kept going down, and then I would have gone into a sell signal. That wouldn't have been good. Right there, and then it hooks back up. So that's kind of a mess. Just kind of went into a sell and then a buy. And the whole point of this is that even if you get these sloppy points here where they hook down and up, you're being careful about your entries, you know, whatever you're doing here. So even if you get caught wrong here, let's say that you were trying to short, let's say that this was a sell and you shorted right into here. I mean, the next day you can see if it's not moving for you, you know, you can get out of that. And again, we're back into an uptrend here, so now I'm looking to buy. So I buy there on this, dropping down this there, looking back into here. I'm still a buyer because I'm still in an uptrend, right? And right here it becomes a problem because we go down into a downtrend here, we go back into an uptrend, and let's just take a look at this next downtrend just to keep it simple here. And so on. So you can just kind of go on endlessly doing this, and you can feel pretty good about your entries just because you are aligning yourself with the trend. You're aligning yourself and you're looking for pullbacks. And a lot of times these pullbacks are quote-unquote invisible pullbacks. You can't see them, right? They're microscopic. You can't see them, but you can see them up here. So this is some shorting ops right here. So shorting into there, shorting into there. No real opportunities into here on this too, right? So you just kind of shorted there and you just stayed short, and so on. So, you know, I think you get the idea here. So, you know, I could just go on and on doing this, but I think you get the idea of how this works, and this is going to give you like a basic framework on what to deal with. If you take a look at our market right now, just as a reference point, we know that this market is in this little uptrend. It started here. It's about to be in an uptrend, right? It's not even in the uptrend yet. It's the last few days have been up, so we know that hooked up into a buy. This hooked down into a sell right there. Let me make that into a sell so you can see that. Okay, so we're still in a sell, right? Even though this hooked up into here. So this RSI has been at the top here, so technically we would have been shorting into that, right? So we don't really know how much of that is a seasonal bias. That little rally we had, it could have been, you know, holiday bias going on there, but you know, according to this model at least, we're still in the sell. I mean, looks like it's about to go into a buy, but wouldn't surprise me if we pull back this week one more time before we rally back up. But again, the model kind of tell us, you know, what's going on with that, and that's basically it. So hopefully these two lessons on stochastics have given you at least a more comfortable feeling with the market and how to identify at least where is the trend going, more or less, and how can I get into that trend once it's moving, and how can I make some trades. And again, this is not to try to pitch some kind of a perfect trading system, but it's just to give you a basic introduction on how you can just start reading charts. I mean, just as a basic, as a backdrop, you can say, okay, you know, there's a lot of unpredictable things in the market that go on, and you know, you can start looking at so many different variables. But at least I think this should give you a basic a starting point to get a feel for what's happening with this market. All right, I'm Shane Smolian. Thanks for watching. I hope you got something out of this video, and I will talk to you soon.